Neha Vashisht Mahajan, and you are here with me on ET Markets live stream, your one stop for everything related to markets and more. In today's show, we will discuss how you can navigate through stock market during geopolitical issues. And to discuss that, we have Dr. Mukesh Jindal with us, co-founder of Alpha Capital. Welcome to ET Markets live stream, Dr. Jindal.
Thank you, Neha. Thank you for inviting me through this session to discuss important geopolitical event, and I'm looking forward to the participation. Thank you.
Well, the pleasure is all mine. And to start with, the first thing I want to discuss is that why is it important to understand how warlike situations and wars affect the stock markets?
Yeah, Neha, we have a war happening right now, and Israel and Palestine war. Now, see, if you look at the history of humans, humans have always fought wars, and the wars have always led to huge destruction of human life and wealth for the people who are involved. And generally, the war
Right.
has been majorly fought for the land. Land is a primary reason for any war, and I think it's very sad that humans, fight for the land because there's so much of cost
Mm.
involved. But you cannot avoid it because the wars are always fought to satisfy the ego of people in power. It's a normal
Mm.
human people who suffer. And what I believe is that war is going to continue for many years. They have been there in existence. If you look at the wars, we had World War One, World War Two. Recently, we had Iraq War, Afghanistan War, and we have the Russian-Ukraine War already running. And on top
Yeah.
of this, this has come up. So one, I think investors need to become comfortable with the fact that war is something which will always happen. There will be
Mm.
very few instances when you will have peace years. So that is a very important consideration. Now, if we talk about what will be the impact of a war on the markets, war definitely impacts the market. There's no denying the fact. And why does it impact? Because generally as a human, we get affected. Our emotions are
Yeah.
attached to the war. We become fearful. We feel that there could be a worst case scenario, and we become very
Mm.
afraid. And it also changes our behavior towards our investments. And normally investors in such scenario, they try to come out of stock investments, other volatile investments, because of the fear of loss. And there are a lot of
Right.
time knee-jerk reactions which happen, and that's why markets normally what we have seen is that corrects in the short term. But again, what we've also seen is that in the long term, if investors hold on, then markets also bounce back. In fact, I'll share with you
Yeah.
an important data point. There was a research done on the US markets. It covered
Sure.
all the events, geopolitical events since 1944. And there were around 35 geopolitical events. Now, what they found out that is in 1 month after the event, markets are generally mild negative, and
Mm.
after 12 months of the event, markets have given in US almost 7.5% in dollar terms. And there was a probability of 63% when market was positive. So clearly, it's a short-term event, and long-term markets do pretty well during war-like situation.
Right. So, if we talk a little bit more about the war, this attack by Hamas in Israel happened on the Saturday, on the October 7th. After the attack, when the markets resumed, markets in the Middle East crashed, and the shekel, which is the Israeli currency, also went down just after the attack. So, what are your thoughts on that?
Yeah, Neha, you're correct. The Middle East markets, especially the Israel markets, has seen a lot of volatility. Just to give you a sense, Israel stock market crashed by 7% initially, and we have seen recovery in the last few days, and it's now only 4% from the level of the Saturday. It's only down by 4%. If you talk about the currency of Israel shekel, it went down by 3%. And what the Israel government is also trying to do, it is trying to stabilize the currency. It has decided that
Yeah.
it will be selling almost $30 billion of its US reserves to stabilize the Israel currency. It has almost $200 billion of reserve. So of course the
Yeah.
markets are seeing volatility. But Neha, I think this is not so important because this is just a data point. What is also important is to understand the the geopolitical event, what is happening in Middle East, because that will, make us understand how the currency market and how the stock market of Middle East will do in the future. So let me
Yeah,
just give you background of this, Middle East crisis. See, one,
sure.
Neha, Middle East is a very, very different field. The fight over there is not just about land, but there is there's one more important precious commodity, which is black gold. And black gold is
Hmm.
nothing but oil. And,
Oil.
the countries over there have, fought war for many decades. Not just the countries over there, globally, all the countries, somehow are involved with that. Now,
Hmm.
if we look at the brief about, in the sense what was happening before this attack, see, recently there was supposed to be a deal between Israel and Saudi Arabia, a peace kind of deal, which could have stabilized, the whole of the Middle East area, and there would have been a peace which should have come by then. But,
Yeah,
I think some people were not happy with peace in the Middle East. Of course, the direct culprits, the Hamas, which is a Palestinian organization, and also the Hezbollah, which is from the Lebanon, which have the border with Israel in the north. The direct involvement of these two groups are definitely known. But what is also being suspected is that Iran, China, and Russia may be also involved in this kind of event. Now, if you ask me, Neha, there are three scenarios which may play out in the coming months and which investors should watch out in the Middle East. See, first scenario is a best case scenario. The best case scenario is that it stays as a localized event between, let's say, some kind of war happening between Israel, Hamas, and Hezbollah, and let's say after a few months it stabilizes or there is a ceasefire. And I don't think it will have a lot of impact on the markets because Israel, Hamas, or Hezbollah are not directly involved so much in the crude trade. So I don't think
yeah,
markets will really react to it so much, and it will be more like a localized event, like what is happening in the Ukraine and Russia. The war has been going on since February 2022. It has been 18 months and hardly any impact. So this is the best case of scenario. Second kind of scenario which can play out is that the involvement of Iran is known, and Russia, Iran, and US also gets involved in this crisis. In that case,
yeah,
what will happen is that US will put sanctions on the Iran, and what it will lead to is that the supply of Iranian oil will come down from the market. See what was happening recently. Saudi Arabia and Russian, they had cut the supply of the crude, and because of which crude had gone to 95. And what was happening is that Iran had increased its oil production to support the demand of the crude. But if US puts a sanction on the Iranian
yeah,
oil, then we may see the crude going to $100, and which will
yeah.
have impact on the markets, because the emerging markets who are net importers of crude will have some impact. But I think India will still manage with crude being in the range of 90 to 100. This is also a possibility. A worst case scenario which may also play out is that Israel attacks the nuclear facility of Iran, and Iran releases its fighter from Syria, Lebanon, and other surrounding countries into Iran. I think that's a very worst case kind of scenario. And in that case, the
Yeah.
crude may go to $150, and inflation in US may go to 6 to 7%. So different possibilities. The worst case scenario possibility is 0.1%. Let's hope for the best, in the sense that it's more like a localized event than anything else.
Well, hope so. And I also think that after Monday, the markets actually rebounded globally as well, because on Monday we saw a sharp decline. The markets fell by almost 500%, 500 points in India. But yesterday was better, and today also the markets are in the green, and globally also the stocks are not doing so bad. So I think it was more of a temporary thing, but till this war goes like is completely done, we have no idea what can happen next. So it's a little unpredictable, but I think most of the analysts are saying that long term investors don't need to worry that much because people start panicking. So I feel that it's fine for the long term investors.
Yeah, Neha, see, if we talk about the market, you're right. The Indian market fell on the Monday, and Tuesday, Wednesday, it was up. The reason why the markets went up was because of the commentary which came from the vice president of US Fed on Monday night, that, because of the high interest rates in US, they may be pausing the next US, hike in the
Interest rate
interest
hike,
rates.
yeah.
And so market has taken a relief that, okay, maybe the Fed is done with the hiking of the interest rates, and that's why, the globally the markets have been going up. Let's hope the trend continues, and let's hope that it doesn't impact the market. Now, you asked about what should be the strategy, in the sense that what should the long term investors be doing, and what will be the impact on the markets. See, Neha, as I had discussed that, generally what we have seen is that this is a short-term kind of impact. Normally, during the crisis, markets fall during the short term, but long-term it bounces back. The most
Yeah.
recent example is, the Russian-Ukraine crisis, which started on February of 2024, 2022, 24th of February 2022. Now, during that time, the Sensex was at 56,000. Okay.
Yeah.
And today we are sitting almost 18% up, and Sensex is at
Mhm.
66,000. So a lot of people worried at that point of time that it's a crisis, it's a war, come out of the market. But eventually, market is up 18%. So it becomes
Right.
very difficult to time it. Or for that matter, if we look at a big event, 11 September 2001, when there was a Twin Tower attack, in the US, I was in college
Yeah.
during that point of time, and Sensex was at 3,000 level. And today Sensex is at 66,000. So, market has gone up by 22 times. So if someone has a long-term horizon, it really doesn't matter. Now, what I'll also suggest, Neha, to the investors is what they need to keep in mind is, one, please don't panic. Please don't panic. Please don't be afraid. Don't get worried. Don't take any decisions in haste driven by emotions. So don't get worried about that. Don't try to also time the market that you can sell it, and again you will be able to buy when market falls. It's very difficult to do those kind of things.
Yeah.
Now, what
Yeah.
also it means is that what investors should be doing is that, let's say if we talk about the short term investors, let's say if you had parked the money for short term, then maybe it's a good time to do some profit booking and take the money out of the market, because we don't know how this will go. There could be some kind of volatility. Let's say you need money in 6 months, 12 months time, then take out and keep it. But if it's a long term money, if it's a 5-year, 10-year money, you really don't have to worry, and you should continue to hold. What you can also do, the long term investors, they can do is put some cash. If you have cash ready, in the sense that if market falls, then you can buy, because this kind of correction also gives you an opportunity. And last, what I'll also suggest, that if people have done leverage trade, that is, you borrowed the money and invested in the stock market, or you have invested in high beta investments. When I say high beta, it means which goes up far high when market goes up and also tanks more. You can consider reducing beta in the portfolio. Otherwise, I think you will be all fine.
All right. So before moving ahead, my request to the audience that if they have any questions, they can ask Dr. Jindal in the comments, and we will take the questions at the end of our segment today. Next thing I want to discuss with you, Dr. Jindal, is that if there is any investor or any person who is new to the markets and they don't know anything about the markets, how crude oil prices work, how markets work, I want you to tell us that how are crude markets and other commodities such as gold are interconnected.
See, Neha, for a new investor, and who has a long-term horizon, I don't think he should worry about this geopolitical events. He should worry about crude, inflation, economics, GDP growth, because these are cyclical events which will continue to happen. And according to me, these are noise. They're good for
Yeah.
people like us who can do commentary on that, and
Hmm.
tell stories on that. But I think for investors or investments, it's really not a relevant information if you're a long term investors. And
Yeah.
long term investors should continue to invest in the equities. The best way is you do through some fund managers, and continue to do your SIP investments. In fact, these kind of events they help investors buy more units when markets are down. So don't worry about this. The only thing is keep your time horizon as 5 year plus, and keep your eyes closed and just keep investing. So that's a simple answer for your query about the new investors. Now you also asked, what is the relation of crude on markets, other commodities? How is it interconnected? See, Neha, crude is a very, very important commodity. For all the commodities, crude is something which is very important because crude is used, for cars, for heating of houses in developed markets, Western countries, for gas, for everything. And crude
Yeah.
is unfortunately found in, very few countries, and most of the emerging countries have a deficit of that. And we import crude. Normally what we have seen is that whenever crude prices goes up, the price of most of the goods also goes up because they get transported, and if transportation cost is up, everything becomes expensive. And when things goes expensive, the inflation also goes up. So one, there is a direct correlation between crude and inflation. So if crude going up means inflation will be high. That is one impact. Now what happens when inflation goes up? Government focuses on controlling the inflation, and the best way to control inflation is by hiking the interest rates. So in India you have RBI hiking the rates, you have US Fed hiking the interest rates to control the demand and hopefully to control the inflation. And that is something which happens. So going up of interest rates is good for, let's say, fixed deposit investors
Hmm.
because they start getting higher rates. But it's bad for equity investors, and generally high interest rates are considered to be negative for the stock market. Negative because corporates are borrowing money from the bank. If interest rate goes up, they have to pay higher interest to the bank. Even the demand goes up, and then equity markets generally see a negative trend when crude grows up. So that is the market impact. If you talk about other commodities, generally most of the commodities go down because when interest rates are high, there's a global slowdown. Most of them
Yeah.
go down. But in this kind of scenario, if the war plays out, we may see gold going up because it's considered to be a safe haven. And if the crisis becomes really bad, gold may go up. US dollar may also go up because of the safety of the money which people consider it to be. So these are, everything is connected, if you ask me. And but these are
Yeah.
short term events, and
Hmm.
long term investors may not worry about it.
All right. Okay, so next thing I want to discuss is that I think we already spoke about it a little bit. You gave us some numbers also. That is it true that every situation, every warlike situation works negatively for the markets?
So, Neha, I think that's a very, very important question. And people normally perceive that war-like situation is negative for the markets.
Hmm.
And of course, it's negative. There is no denying about the fact because, markets by default like stability. It likes
Yeah.
peace. And because if there's a peace, stability, then corporates are expected to do well. The GDP growth is expected to be smooth. This warlike events breaks that journey, so it increases the volatility of the market. And normally investors don't like this kind of volatility. They also want the journey to be smooth, so it definitely impacts. But as I gave you some examples about Sensex, about US attack or any war event, there's a short term impact and markets go up in long term. But for smart investors, these war-like events creates an opportunity. There are many investors who watch the market and who have a good history and record of investing for many years. They have the experience of seeing how markets behave in this war-like situation, and what they do is whenever there is a sudden drop in the market, they buy more
Yeah.
because they know that markets will eventually bounce back. And this correction in a market gives you an opportunity to invest. So smart investors takes advantage of this kind of correction. And I'll be personally very happy if more and more investors understand this, that whatever correction is there, happening in the market because of geopolitical events, it's temporary. And if you invest more, you will get more return. So I think
Right.
it's a fantastic event, and I think little bit of volatility, as I told you in the beginning, it's going to be part of our life, and one should make this kind of volatility as a normal. Yeah.
All right. Okay, before we take questions from the audience, one last thing I want to discuss is that a lot of stocks came out in the news also that were connected to Israel. So, my question is that should investors take out money from the stocks that are connected to Israel, such as Adani Ports, Sun Pharmaceuticals, if we're talking about separate stocks?
See, Neha, one, India doesn't have lot of trade business with Israel. If we talk about import and export, India imports only 0.32% of its total import from Israel and exports only 1.89% of total exports to Israel. So, one, there are very few companies which have been impacted by this, Israel disturbance. Of course, you highlighted companies like Adani Ports, Sun Pharma. There are other companies like, Lupin, NMDC.
Yeah.
Then there are IT
You're right.
majors, TCS,
Hmm.
Wipro. Then there's Ircon, which was expected to benefit from the Middle East India
Corridor.
corridor,
Yeah.
rail corridor. So these have definitely been impacted, and we are seeing some kind of volatility. Now, my advice to these kind of investors is that when you invested in these stocks, you must have used some logic to invest that it will do well in the coming time. If you ask me,
Hmm.
these events, geopolitical events, are temporary. Hopefully, it will settle down, and you should continue to stay invested. It's not a very prudent idea to sell them when they've already corrected. And in fact, it will be good to hold because now the valuation will be better. But for investors who are already invested heavily, if they have a very high exposure in these stocks as a percentage of the portfolio, let's say if someone has more than 10% in a single of these stocks, then that is a time where you should focus on risk management. In that case, what you can do is you can look at reducing your exposure in these stocks and diversify your money across different investments. See, Neha, what also becomes important, and I also want to highlight this philosophy to all the investors watching this show, that when you invest, Mr. Warren Buffett gave, two rules of investment. Number one rule is never lose money in the stock market. And number two rule is not to forget the rule number one. So any investment which we do, capital protection is the most important criteria. If any
Right.
investment strategy, any investment where the capital erosion can happen, then we need to focus on risk management rather than the return. So over here, if the investors' risk is getting, disturbed, if the portfolio risk is going up because of high concentration risk to these stocks exposed to the Israel, I'll suggest them to reduce the exposure. Maybe these stocks goes up in future, maybe they will earn less. I don't think it really matters because eventually capital protection, better risk management becomes important.
Yeah. All right. So before we conclude our session for today, I'm going to take some questions from the audience that are relevant to the topic of the day. The first question I'm taking is by Rohi Shetty. She's asking, which is the best index fund at present?
See, if you talk about index funds, of course, have lately become popular, and suggest all the large cap investors to invest more in a index fund than active funds. One of the fund which you can consider is UTI Nifty Index Fund, and which has a phenomenal track record. The tracking error is less, and this fund invests in top 50 stocks of the by market cap of Indian stock market. Now, what is also happening? Nifty Neha has become very strong index because the employee provident fund is investing almost 4,000 to 5,000 crore on a monthly basis in this index. So this index is seeing a lot of flows from employee provident fund, from institutional money. So I think this is going to become bigger and bigger, and the cost of this index is also pretty low. So this is a good index to invest.
All right. The next question is by Harish. He is asking, markets are reacting positively also. So what does it mean?
So Harish, when we look at the markets, a lot of time we think that markets are driven by one particular event. but it's not true because there are many events which plays out simultaneously, and you have to figure out which event is making a more impact on the markets and which becomes very difficult in the short term. Currently, last 2 days market has been going up because of the statement from the vice president of US Fed, which happened on the evening of Monday India time, that the interest rates in US has gone up significantly high, and
Yeah.
which market is now assuming that the Fed is not going to hike the rates, it's going for a pause, and eventually rates will start coming down. So that's the reason, and accordingly we have also seen interest rates softening a bit, and maybe the worst of the market may be over. Yeah.
The last question I'm taking is by Dilip. Dilip is asking how to invest in the current scenario.
So, Dilip, very interesting question, and I think everyone is asking for this. And
Yeah.
it's one of the toughest question. No one really knows, Dilip, what is going to happen in the short term, and that's where the solution comes is asset allocation. And asset allocation means how much as a percentage of your asset you should invest in equity, debt, real estate, gold. And if you have not done your asset allocation policy, please make a plan
Hmm.
that, let's say, if you have 100 rupees, how much should be invested in equity as a percentage, and equity you should park if it's long term, how much should be in debt or fixed income for short term, how much should be in real estate, gold. And once you figure that out, stick to your asset allocation right now. I don't think that we have come to a situation where markets are either very extremely overvalued or these events are going to play out negatively. So stick to your asset allocation right now. Don't reduce your equity exposure at this point of time. I'll not advise you. And if you are underexposed in equity, you can continue to build up your equity exposure through gradually. And what I'll also suggest is that in current scenario, if you're working, if you have a regular income, consider doing monthly SIP in equity funds, because equity funds will take advantage of these volatile markets, and SIP is a fantastic way of doing that.
All right. Well, I hope that answers Dilip's question. And with that, we have reached the end of our segment today. Thank you so much, Dr. Jindal, for taking out your time and giving it to ET Markets live stream and discussing about the Israel-Palestine war. Thank you so much.
Thank you, Neha. Thanks a lot for the invite, and thanks to everyone in the audience for listening to